Welcome to Focus Today. I'm your host, Perry Atkinson, and constantly we're talking about the economy, and the economy is constantly in the news for various reasons. I am really honored to have with us a special guest today, John Tamny, the author of Delusion, which is a fascinating book, political economic editor for Forbes. There's a picture of the cover of his new book there on the screen. John is also the editor of realclearmarketing.com. That's his website. He frequently writes about securities market, tax, trade, and monetary policy issues for a variety of publications, including the Wall Street Journal, Financial Times, and the London's Daily Telegraph. Again, John's website is markets.com, so check that out. John, good to see you. How are you, friend?
I'm great. Thanks so much for having me on.
You bet. Where are you? Where are we getting you from?
I am in Washington, D.C.
Oh, okay. Well, good luck. Well, good to see you. So much to talk to you about. Wow. I guess one of the concerns is, why are we still so warm to China these days?
Well, I think we're warm to China for one, out of practicality. If we weren't interacting and producing alongside the Chinese, we'd be a much poorer country. We'd be much, much less advanced. And so would China be. But I think there's also a reason to do it. The Chinese clearly love Americans. Forget about what their politicians think. In China, there are 5,500 McDonald's. McDonald's plans to build 4,500 more within the next couple of years. The Chinese people are conducting a love affair with all things American. There are 7,000 Starbucks, but if you check each week, the number grows by hundreds and hundreds each week. GM cars sell there more in China than they do in North America. There is great reverence among the Chinese people for all things American, so I think that's a good reason. But there's also the practical thing, countries that are working together, where people are producing alongside each other, they're not bombing each other. And so to me, trade has always been the safest, greatest foreign policy concept mankind's ever conceived.
Interesting. So how do you think the president's managing it?
I think he's getting better at it. I've always felt that if President Trump could visit Shanghai and see all those tall buildings everywhere you look, he would see, wow, I see myself in the ambition of these people. They want the things that I wanted when I was coming up as a businessman. And so I think he's slowly starting to realize that if he wants growth, China is a substantial part of the equation, and I hope that's true. I don't think it's healthy for the U.S. to be separated or wall itself off from other parts of the world.
In addition to their ability to produce things at a whole lot less cost, they're very rich in rare earths materials, and I don't think the average American understands what that is and why that's so meaningful. Can you help us out?
Well, there are certain commodities that are uniquely produced or excavated in China today that loom large in the creation of all sorts of things that we have here: electric cars, semiconductor chips, you name it. The list is long. There are certain things produced in China that if those rare earths, those elements, were not to reach the United States, it would have a substantially negative impact on U.S. economic growth. And it's hard to get too technical with them, but it's a reminder that everything in the world, from the pencil on up to the 747 Boeing plane, is a creation of remarkable global cooperation. And I think that's the best way of putting it.
In the meantime, we do a lot of trading, obviously, with China and vice versa. But we have a tendency on both sides to put restrictions or conditions on those trades. How does that interfere with just somebody wanting something that the other country produces?
Not very much, thankfully. Let's never forget, I think the best way to look at this is to go back to the 1970s. To this day, economists and historians say that when the Arab members of OPEC embargoed the U.S. in terms of oil, that somehow we didn't get their oil. Nothing could be further from the truth. We still consume every bit, if not more, Arab oil than we did before the embargo. We just bought it from those they sold to. And something similar is afoot right now with China and its rare earths. It's being said that Xi Jinping is going to limit the export of rare earth elements to the U.S. as punishment for our tariffs. He can really do no such thing. Short of the Chinese stopping the sale of those altogether, they're going to reach the United States and they'll be used by U.S. producers as though they were produced in the United States in the first place. You just can't put conditions on market goods because you can't control their final destination.
So, if I mean, it's hypothetical, but if China decided not to sell the United States rare earth, could we survive without that supply?
Yeah, because we would still get it. Now, it's certain that China could cease selling it altogether by quite literally not selling the rare earths at all, as in demanding that the producers of it hoard them. But China can't do that because it would be devastating for its economy, and it would very much frustrate a people that has come to love the fruits of economic growth. So short of them sitting on them, in the figurative sense, we will always have China's rare earths simply because China, for one, China can't control the final destination of those goods. But for two, no country, not the U.S., not China, is going to give up such a massive market that is the United States or China. So we can talk big about how we're not going to sell this to you. These market goods are going to reach each country because each country is incredibly productive economically. And because it is, no one's ever going to give up that market.
So if I'm hearing you correctly, weaponizing a commodity is just a waste of time.
Total waste of time. It's never worked. And again, people say, well, the response understandably will be, wait, this guy says that the Arab countries weren't able to keep the oil out of the United States. Well, why did oil prices spike? Well, the reason they spiked had nothing to do with the Arab embargo. It had to do with the fact that President Nixon severed the dollar's link to gold. And in doing, he shrank the value of the dollar in which commodities are priced. And so it wasn't just oil that became expensive in the 1970s. It was wheat, meat, soybeans, silver, every commodity known to mankind rose in price, not because it was suddenly scarce, but because the dollar in which it was measured had been shrunken substantially by President Nixon's decision.
So, given the back and forth exchange today, especially with this administration, tariffs, and all of those factors, how would you describe the value of the American dollar today, or its strength?
It's a pale imitation of what it was. Let's never forget why currencies around the world have long been measured in gold. It's not because gold is pretty or because of, some strange reason. Markets happen upon gold because it's very constant as a measure. And so in 1971, a dollar bought 1/35 of a gold ounce. By 1980, it bought 1/875 of a gold ounce. During the Reagan and Clinton presidencies, they were for a strong dollar, so the price of gold fell quite a bit. That's changed in the 21st century. At present, a dollar buys roughly 1/4000th of a gold ounce. What a tragedy. Donald Trump is for a weak dollar. I think it's his worst policy. And I think it's one that's restraining what could be a much more successful presidency. But yeah, the dollar is presently quite weak. And implied there is that we're not as investing as much in the U.S. as we otherwise would. Implied there is that the U.S. economy is not growing as fast as it otherwise could.
So how threatening is cryptocurrency to the dollar?
Well, I think ultimately cryptocurrencies will replace the dollar, not in a bad way for the United States. but in a good way. It will force the U.S. Treasury to get serious. Cryptocurrencies are a logical response to some degree to shrinking global trust in the currencies issued by governments. There are varying ones that don't do that, but ultimately, that was the theme behind it. And so I think ultimately, I hope it's going to force the U.S. Treasury to say, our job is one thing: to issue a currency that people trust and that holds its value as a strict measure throughout time. And I think cryptocurrencies will either force that, or you'll see that people shift their wealth holdings from dollars, euros, pounds, yen, yuan, you name it, into private crypto money that they trust more than government oversight of money.
So on the global scene, where China can change the value of its currency overnight, how impacting is that?
Well, never forget, the Chinese do as most countries in the world do. They basically have their currency pegged to the dollar. They have outsourced dollar currency policy to the United States. And so really it's us. The United States is the most powerful currency country and most powerful country in a lot of ways in the world. We control what other countries do. And that's why I get so frustrated when we pursue policies of devaluation. We're not just harming Americans who earn dollars. We're doing great harm to the world. Money has one purpose. What did Adam Smith describe it as? The sole use of money is to circulate consumable goods. You can't eat money. You can't sleep in it. Money is what we use to move real wealth around. And when it has stable qualities, the ability of people to work together around the world, to peacefully interact, skyrockets. And so this is not a China thing. This is a U.S. thing. We've got to do a better job of maintaining the value of the most important price in the world, and that is the U.S. dollar.
Yeah. One last question before I take a break. If you were king for the day, what would you do to strengthen the dollar?
I would quite specifically say, going forward, the dollar has this value in terms of gold. We will redeem dollars at that gold price, and we will guard this like we guard our firstborn. Once you do that, all this investment that has moved into inflation hedges, into ways of protecting wealth rather than investing it in new ideas, would find its way out of hedges and protections of wealth into intrepid new ways of growing wealth, new jobs, new companies, new advances that would make the present, which is wildly prosperous, appear somewhat primitive by comparison. This would be my number one policy, and nothing else would come close.
Very interesting. Let me take a quick break here, John. Let me show our viewers and listeners. We'll come back and talk about his book, Deficit Delusion. There's a picture of the cover of the book on the screen. He does have a website, and that is realclearmarkets.com. And there's a picture of that landing page. We'll take a quick break, and we'll be right back. Welcome back. What an honor to have with us today John Tamny. He's the author of Deficit Delusion. He's also a political economic editor of Forbes. He also is the editor of realclearmarkets.com, and you'll frequently see his articles, including the Wall Street Journal, Financial Times, London's Daily Telegraph. We're talking about the economy. And again, visit his website, realclearmarkets.com. Okay, John, to your book, this is fascinating to me because I spent a lot of time talking about the economy, and I'm a student. I'm certainly not a professor. But the point is that you hear good and bad about the deficit. What's your opinion of the deficit?
My opinion is that the deficit is a symptom, not a cause. It's a symptom of the market's expectation of lots of tax revenue right now, but much more perilously, exponentially more tax revenue in the future. And how you know this is just consider any individual or business. Individuals, when they graduate from college or if they're in high school, can't borrow much at all. But when they're in their 50s, they can frequently borrow quite a bit more. And why? Well, because they're viewed as capable of paying back things that they couldn't pay back when they were younger. They're more prosperous. Businesses are no different. To start a business, it's very hard to borrow any money for it because it may fail. But if you've run it successfully for years, you can borrow quite a bit more. Just looking at Uber, a company that a lot of people know, in 2011, it sold 20% of itself for $11 million. Today, it's worth $200 billion, and it has 12 billion worth of debt. Why does it have debt now? Because markets trust its future. And so governments are no different. Deficits are a sign of prosperity, but they don't drive prosperity. The fact that the U.S. has so much debt is the world telling us, wow, you're the richest country on earth, and you'll be that way for quite some time. But let's be very clear, it's not a good thing that Americans are so overtaxed that everyone wants to lend to us.
So, how close are we to hitting the wall?
Well, Treasury markets are the deepest, most informed markets in the world because the treasuries are the most owned income streams in the world. Look at what's happened over the last 45 years. In 1980, total federal debt was $900 billion, and it cost Treasury 11% to borrow. In 2025, there's 38 trillion in debt, and Treasury pays roughly 4% to borrow. That is the market's way of saying we're nowhere near hitting the wall. That we're not only a healthy country but that we'll pay all this debt off with ease. And so I look at this, as you can see, quite differently. I'm trying to convince people that the scandal or the crisis is not the debt. It's that markets are so confident that we'll be able to pay it off. And that's the market's way of saying, boy, you Americans, A, produce a lot of wealth, and B, you tragically tax away way too much of it such that you can pay off the debt so easily.
Is it possible that those who buy the notes of our deficit could call for the note and that would put us into bankruptcy?
No, well, yeah, sure, they could do it. Why they would, I don't know. Never forget that China's a relatively poor country, certainly much poorer than the United States. They want that money paid back. And so do the Japanese owners of it, so do the American owners of it, so do the British owners. Yeah, sure, they could. I don't know. It could be something built into the debt that there's no call on it in the first place. But yeah, they could do it. Let me stress there that it'd be easy for the U.S. to pay if so. Because, see, the world would line up, other lenders would line up to basically pay off the debts called in because they trust the U.S.'s ability to pay it back.
In the meantime, the president's economic plan is to pay down the debt through all of this tariff activity. Is that realistic?
It's not only not realistic, it won't achieve anything. What happens when people pay down credit cards? They just have greater borrowing power. Let's say we pay off lots of debt. Okay, so what? The reason we have lots of debt is that tax revenues come in enormous amounts right now, and they're going to come in even greater amounts in the future. And so we pay off the debt, so what? We have a problem of too much tax revenue now and the expectation of much more in the future. Until we fix that, until we quite literally make it policy to undertax the rich so substantially that they're paying exponentially less into the U.S. Treasury, we'll always have debt. We have debt now not because the government spends too much, although it spends too much. But the main reason we have debt is because the U.S. Treasury has taxable access to the richest people on earth, and they keep getting richer by the day. Good for them. I think that's good too. But when you overtax such enormous wealth creators, it's easy for politicians to run up debt based on that overtaxation.
Okay, but at the end of the day, the interest on the debt is a significant line item budget problem. A big one. I mean, sooner or later we have to address that, don't we?
See, I think I could convince you that what you describe as a problem is a blessing. Think about it. If all the government's going to do is to continue to pay off debt rather than dream up new programs, that's a good thing. And so that's why I argue in the deficit delusion that Social Security and Medicare were really bad ideas, and they're bad ideas to this day. But I argue in the book, please do not reform them. Because let's say they reform them and save trillions of dollars per year. Whew, what a dangerous thing. You're suddenly going to give Congress all this fresh money to spend and to dream up new programs with. I don't want them to. I want Social Security, Medicare, and the interest on the debt to gobble up more and more of total revenues so that Congress is hamstrung from coming up with new awful ideas. Because, see, they all start small, but then they grow bigger and bigger. Medicare began as a $3 billion program. Now it's a $1 trillion program. Let's make sure that Congress doesn't have fresh money to dream up new, really, really awful ideas.
I have to admit, that's an interesting way of looking at it, where the debt becomes a spending guardrail.
Yes. My book is very different. I think very differently. And that's why everyone should buy it.
Okay, so in the foreseeable future, you just see this thing just kind of humming out there, but it does grow. Is there a breaking point?
Well, that's what's interesting about treasuries. Remember, it's not a 1 year treasury. It's a 1 month, 3 month, I think, 1 year, 2 year, 5 year, 10 year, 30 year. The markets are looking well out in the future, and they're saying, boy, this money's going to be paid back, and it's going to be paid back easily. And so that's what I keep trying to make the point about. The crisis, if there is one, or the perception that there will be a crisis or they won't be able to pay off, that's already priced into the treasuries, and yet markets are still saying that it will be easy to pay back. And so I'm trying to convince Americans that if you really want to lower the debt, the only way to do it is to paradoxically substantially reduce tax revenues flowing into Treasury so that lenders aren't so eager to lend to us anymore. We've been fed this lie by left, right, center, supply side for years that, we'll just grow our way out of the debt. Well, come on. Since 1980, the U.S. economy has grown fantastically, brilliantly, beautifully. It's been amazing what major strides we've made. And I'm merely making the point, well, of course, the debt went up during that time. Lending is an effect of confidence in the future incomings of the borrower. And so until we recognize that sending more money to Washington is the path to more and more debt, we're just going to have more and more debt. And so I keep predicting, and people keep ridiculing me for having the temerity to point out that the solution offered by the various ideologies for the debt, more tax revenue, ensures that we'll have exponentially more debt in the future.
Very interesting. So do you see our tax structure changing anytime soon?
No, I don't. There's accepted wisdom from left, right, center that they all agree that the rich should pay enormous amounts in taxes. And they say, well, we're lowering the tax rate. But never forget, even if Elon Musk's tax rate was 0.01% each year, he'd pay exponentially more taxes than I do, even at that rate. I think that's immoral, but I also think it's dangerous for us as a country. When a tax on Elon Musk is a tax on you, me, and every single viewer. And the reason for that is that government spending is very damaging. It's very harmful, as is all central planning of precious resources. And so I'm trying to convince people that lower taxes on the rich to lower the burden of government on you, on everyone. But it's really hard to do. They say, well, we can't do that. We've got all this debt. And I say, yeah, we have all this debt precisely because we tax the most productive people in the world way too much. They send too much to Washington, and lenders are only too glad to lend to Washington precisely because it has such massive wallet share of such productive people.
Very interesting. One last quick question. I want to get you back. You're fascinating. What do you think of the president's economic plan?
I love that he loves wealth. I just wish that he would make a more energetic case for the wealth creators and say, I will not burden the American people by overtaxing them so much. When the rich are undertaxed, what choice do they have? They can't buy more mansions. They can't buy more private planes. They have all that. All they can do is invest. And there are no companies and no jobs, and there are no advances without investment. The rich are essential to economic progress. Yet we overtax them year after year. I wish he would make that case. Trump can uniquely pay because people believe him, and they respect that he's a rich man. If he would just say that, I would love his program a lot more. And then throw in, I wish he would talk about, because I think Trump uniquely could make a case for a strong, stable dollar. And I think if the heads of economists would explode, but Trump is the one man who could do it, who could do what Reagan admitted that he failed to do, bring back a dollar defined in gold. Donald Trump could do it between breakfast and lunch. It would make his presidency truly great. I wish he would do it.
Very interesting. Can we get you back?
Anytime. Harry, thanks so much for having me on.
Yeah, you bet. Let me say to our viewers and listeners, first of all, check out John's book, Deficit Delusion. There's a picture of the cover of the book. Everything we just talked about is in there. Check out his website. I think you'll find it to be very resourceful, realclearmarkets.com. And, of course, then look for his articles, the Wall Street Journal, Financial Times, London's Daily Telegraph, and, of course, Forbes magazine as well. Thank you, John. Fascinating. We'll get you back for more conversation.
Thanks, Perry. I appreciate it.
All right,
Thanks so much.
Okay.